Hello and welcome. Today, we're going to crack the code on accounting, what people often call the language of business. And I promise, by the end of this, you'll see it's not just about crunching numbers. It's about telling a story. So let's jump right in.
I mean, really think about it for a second. You buy one small thing from a massive company. How on earth does that single, tiny purchase end up on their giant multi-million-dollar corporate reports? It seems almost impossible, right? But there's this really elegant, logical journey that every single transaction takes. And today, we're going to follow that journey, step by step. You know, every great story needs a beginning. And in the world of business, that beginning is always a transaction. It's the spark, the little event that ignites the entire accounting process. To make this all feel real, let's follow one specific sale. So, imagine a publisher sells 100 books to a distributor. The total comes out to $1,500. But here's the crucial part. This sale is made on credit. This is how most business-to-business sales actually happen.
So what does a credit transaction really mean? Well, it's pretty simple. The distributor gets all the books right now, today, but the publisher gives them some time, what we call a credit period, before the cash is actually due. This creates a promise, a kind of formal IOU, and that's where our story really starts to get interesting.
Now, as you can probably guess, a simple promise just isn't enough in the business world. You need proof. Every single transaction, no matter how big or small, creates a paper trail, or, these days, a digital one, that serves as the hard evidence for everything that comes next. So it all kicks off with an order. Then, and listen, this is the most important document, the seller creates a sales invoice. You should think of this as the official, undeniable record of the sale. It basically says, hey, you owe us $1,500 for these 100 books. Then later on, when the distributor pays up, they'll send something called a remittance advice that connects their payment directly back to that specific invoice. It's all about connecting the dots.
And this trail is just so important because, at the end of the day, these documents are the ultimate source of truth. If there's ever a disagreement, you don't argue based on memory, you just go right back to the invoice. It's the undisputed proof of what happened.
All right, so with our proof in hand, we can finally start recording this sale. But we can't just write it down anywhere we want. See, everything in accounting is governed by one simple, beautiful, unbreakable rule. It's called the accounting equation.
Assets equals capital plus liabilities. Let's break that down. In plain English, it just means that everything that business owns, that's its assets, has to be perfectly balanced by the claims against those assets. And those claims can only come from two places: liabilities, which is what it owes to outsiders like a bank, and capital, which is what it owes back to its owners. This equation has to balance, always, no exception. So what's really cool is how it stays in balance. It's because of something called the dual effect principle. It means that every single transaction has two equal and opposite effects. It's the genius of the system. For example, if a business buys a van, one asset, the van, goes up. But another asset, its cash, goes down by the exact same amount. See? The scale stays perfectly level.
Okay, so to tell this two-sided story for every transaction, accountants use a special kind of language. I'm sure you've heard the words before: debits and credits.
Now please, don't let those words scare you. They're literally just labels. That's it. They mean left and right. We use a simple tool called a ledger account to record things. And to make it easy to see, we often just draw it as a big letter T. The left side is for debits, the right side is for credits. It's that simple.
So, the million-dollar question: how do you know whether to put a number on the left side or the right side? Well, this is the big moment. This is the secret code that unlocks everything in accounting. You ready? It's a little memory aid, DEADCLIC. It tells you exactly what to do. On the debit side, you increase your expenses, assets, and drawings. You can think of these as the uses of your money. And on the credit side, you increase your liabilities, income, and capital, which are the sources of your money. This is the master key. Once you get this, you get accounting.
All right, let's bring this right back to our book sale. What two things happened here? Well, first, our assets went up. We don't have the cash yet, but we have a legal claim to it. That's called an account receivable. And second, our income went up because we made a sale. So we're dealing with an asset account and an income account.
Now just watch this. We apply the code. To increase an asset, our receivables, the A in dead tells us we need a debit. And to increase income, our sales, the I in click tells us we need a credit. So we debit receivables for $1,500 and we credit sales for $1,500. Boom! Perfect balance. The two-sided story has been told.
Okay, so we've perfectly captured our one little transaction. But this is just one entry out of thousands, maybe millions. So how does this one little story become a part of the company's giant epic novel?
Well, at the end of a period, like a month or a year, the company takes all of these individual ledger accounts and just adds them up. That final balance from each and every one of those T accounts we've been using, it becomes a single line item in the final financial reports.
So the final balance in our receivables account, which of course includes our $1,500 sale, gets bundled together with all the other money people owe the company. That grand total then flows right into the current assets section of the statement of financial position. This report is like a snapshot in time and answers the question, what does the company own and owe at this very moment?
And at the same time, the balance from our sales account flows to the very top line of a different report, the statement of profit or loss. Now this report tells a different story. It shows how the company performed over a period of time. And just like that, our $1,500 sale is now officially part of the company's total revenue. The journey is complete.
From that one single invoice all the way to the final reports, this whole logical process, this journey we just followed is what we call the accounting system. It's really a beautiful machine for turning all the chaos of daily business into a clear, understandable story.
I think the main thing to take away here is that accounting isn't just a bunch of boring rules. It's about narrative. The system itself doesn't judge. It's impartial. It just reflects the reality of the business. Which leaves us with one final thought to chew on. What story are your numbers telling? Thanks so much for joining.